much for all the now over 120 people are joining us tonight. We're so glad you can join us on a Mother's Day. Happy Mother's Day for all the mothers that are listening. And welcome for all the people who have been to our sessions before. Welcome back. And for the new folks, I'm going to first run through a quick introduction about Coffee Club. So the Chinese Coffee Club was established 4 years ago, and last year it was officially registered in New York as a 501c3 nonprofit. It provides professional lectures and conferences for Chinese communities and provide collaborations and alliances among the Chinese organizations. There are so many talks now each week, and whichever interest you have, I'm sure you can find something that aligns with your interests. And then the Wiswise Academy, this is the sister organization for Coffee Club. It is established to provide high quality, practical, and affordable finance and investment education for all ages. So there are classes for young adults, there are classes for K-12, there are classes for adults as well. And in addition to different courses, we also provide career training, job internships, and various vocational education and coaching services. If you're new to Coffee Club and if you're interested, there are so many different WeChat groups for a variety of different topics. There are even themes on photography, themes on, I think there used to be a food related group as well. So whatever is your focus, or crypto, and you can scan the QR code on the bottom right, and then you can, once you added the assistant, you can tell the assistant whichever group you are interested in. And then once you join a group, you will start to receive all the announcements of future sessions. And a few quick announcements for the upcoming sessions next week. On Thursday next week, May 13th, we will have Kamala of Laherty. She will be talking about, business writing as a non-native speaker. I've known Kamala since last year, and she is super good in this area, an expert, and I'm sure you will learn a lot from her session. So make sure join at Thursday, 9 p.m. And on Sunday, we will have Tang Li back. For those of you who are interested in investment, I'm sure you've probably taken his course or listened to his sessions before. So he will be talking again, continue to talk about the Q1 earnings on the tech sector. And we will also have talks on Friday. And we don't have official poster yet, but it will be a heavyweight speaker. So stay tuned on the following announcements. On the Wiswise Academy, there are a lot of different investment courses offered there, such as venture capital, fund manager, and option training classes. So if you're interested, making sure that you can, I will leave the QR code in the next slides or two, and then you can scan and then contact to learn more information. And in addition to adult-related classes, we also have for K-12, this special program, summer program designed for K-12 students. And there are Wharton investment competition, Road to White House, and Youth Personal Finance, and the Career Inspiration class. So all these are very, very interesting. And if you have a teenager, if you have children is in K-12, check them out. And here, as I promised, are the QR code for both Wiswise Academy and Coffee Club. Maybe take a picture of the screen and then you can scan or one or both of them. I will make sure to bring up this slide later on in our talk as well. By the way, Allison, are we going to record the session for tonight? Just checking.
Yes, I'm recording, but I mean, from now on, we will maybe put all the recording at one place and share with our audience later. So, I mean, make sure maybe you will not see this replay tomorrow, but you definitely will see its replay sometimes in the next week.
Okay, sounds good. I just don't see the recording button on. So.
Oh yeah, don't worry, I'm recording on my end.
Okay, sounds good. Thank you so much, Allison. All right, so that's my spiel for the commercials. And here, now it's time for me to present tonight's speaker. It's my greatest honor to present to you Frank Lin. I had the opportunity to chat with him yesterday. And if I have time, I could just chat with him for hours. He's such an engaging speaker with tons of experience, and he has dabbed in venture capital, PE fund, and he's done quantitative analysis. He is also a professor at a private college, and his Wharton MBA. He wears so many different hats, and for each one of them, he does it so well. Without further ado, I'd like to give the stage to Frank, who is going to tell us about, from a practitioner's perspective, how private equity and alternative investment.
Okay.
So Frank.
Thank you, Julia. So now that you've put me on a pedestal that I cannot possibly reach, I'll try to downplay the rest of this presentation and try not to let you guys down too much. So thank you for that introduction. Happy Mother's Day to everybody. Thank you for showing up. I can't believe there's 200 people. I've never had 200 people on a chat before, not even in my overstuffed classes at college. But this is great to see. Before I start, actually, though, I'm just curious. I realize that Viswise has a very good structure in place, but I'm just curious, how many folks, or if anybody wants to shout out, like their age groups, what they want to learn from this specifically. Okay, I do have some materials prepared, but I can go pretty much in any direction that you guys want me to go to talk about this. I can do the framework, and then we can talk about stuff more. But as I do many of my classes, what I try to do is I try to keep it as much of a town square and open forum as possible, right? So I realize that, it's a good idea to get people on mute, but at the same time, if you do have some questions in mind, just feel free to shout it out, because, that's the one thing I would tell you. I looked at most of the folks that are signing in. They're of Asian descent to some degree. You're going to find this out about me. I'm a little bit different than most Asian people that you're going to meet, okay? I'm kind of a wild child when it comes to some of the things I'll say, and I'll be very direct about it, but that's just my nature. So that's what I want to do. So, like, does anybody just want to introduce themselves at all? Okay, so I got some questions like, what's the typical day like what's the daily life at a deal team? All right, I mean, we can go into that briefly, but what I'll tell you is that if you're looking for social life at a PE firm, it's better than an investment bank, but that's not saying much. An investment bank, you run 120 to 140 hours a week as an analyst. I think some of you guys that are in that business know this. There have been anecdotes of analysts dying on the job because they were up 56 hours straight. Okay, we even had at my bank when I was at Credit Suisse, we're talking to the German team internationally, and one of the analysts passed out. They were running the model, and the analyst passed out. You hear this big thud. Okay, and we were wondering what's going on, and the guy said, "Look, the analyst passed out. We're going to see if they're going to be all right." Okay, all I could be saying was, "What's the password to the model?" They didn't even call EMS. They just said, "What's the password to the model?" Okay, so gives you an idea of where banks' priorities are. That's sell-side investment banking. Private equity is the buy side, so it's a little bit better, but it's very dependent upon the culture of the firm. So for me, when I was at Providence Equity Partners, culture seemed all right, but when deals were on, it's all hands on deck 24/7. That's how that stuff works. So, you get your times off, but it's the times where you got to run pretty much like a SEAL team, where you're just on all the time. You got to meter your strength. I would just tell you, it's not for the meek. It's not for people that are not dedicated. And what I mean by that, also, it's not for people like, to be honest with you, like myself, long-term, that have an opinion about things and ethics, the way that should be done, okay? So that being said, it is one of the elite fields in finance. And if you get in there and the markets are good to you over time, you will have no issues with, you know, financial at all, right? You'll be just fine. It's just a question of, you know, how much you want to sacrifice to get there, right? So the final thing that I'll tell you is that beyond all this, most of us try to do it solo. You know, we rely on our merit, we execute. But there's a problem with that, okay? Market macro changes all the time, which means that there's ebbs and flows to the private equity market. You might come out and graduate out of a college, might be ready to go, might be top tier, okay? But if there's a recession, there's no jobs. That's just the way it works, right? So more important to me in hindsight than anything else is the proclivity to network. The whole idea of investment banking, private equity actually has nothing to do with the models or what you do. Anybody can learn that stuff. I teach that stuff in school. Yeah, the students love it, okay, because they've never seen anything like that in a four-year college, okay? But that actually is just to get you past the interview. The rest of that stuff that you need to know, it's all Rolodex. It's all networking, okay? And so that's a certain type of DNA. It can be learned, right? If you don't have to have that innately, but that's the kind of job that you're looking for when you do things like this, okay?
We have some audience asking you to just also briefly go through your background.
Okay. Yeah, okay, I could do that. Yeah, so saw my name, right? Name's Frank Lin. So I put my D in the middle because I had enough Abbott and Costello issues with my name. You know, my parents apparently wanted me to have a tough life. So they'd be like, you know, Frank Lin. So it'd be, they named me after Benjamin Franklin, right? So then, of course, the Americans would be like, what's your name? Frank Lin. No, what's your last name? No, Lin. What's your first name? Frank. Franklin? Lin? Franklin? And so that's what always happened to me, right? So I grew a thick skin when I was a kid. I grew up in the Midwest. I'm also a Detroit City kid. So the interesting trivia about me, I think, is that, you know, I managed to kind of understand the culture there and, you know, get reasonably close with a lot of the kids from the inner city. So my wife can tell you this, like the first time she met me at Wharton, I was hanging out with most of the African-American folks. And it's not because I wanted to, it's because they sort of accepted me. They kind of had the same sort of acclivity to me that I had to them. So I have quite a few African-American friends, okay? But that being said, right, I went to engineering school in the Midwest and I got the MBA at Wharton, yada, yada, right? Everybody likes to pump that stuff. I personally don't see it as a big deal. I think what's important is that in terms of networking, I'm one of those guys that builds networks, not a mile wide and an inch deep, but more an inch wide and a mile deep, okay? So that's the kind of network that I sort of rely upon. I do have quite a few contacts out of Wharton, but those contacts that I've had have stayed with me for decades. That's the way I do things. You know, other folks are very successful as bankers and whatnot, having a very wide cut at it, but that's just not my style. When I got out of Wharton, I went to Credit Suisse, a couple of other family offices before that, were Credit Suisse, Morgan Stanley, Providence Equity Partners. Each one of those firms managed, you know, I think Credit Suisse was 155 billion. Okay. I think, you know, I think Morgan was like 25 to 30. Providence Equity Partners still around. I mean, it's run by Jonathan Nelson. He's like the richest guy in Rhode Island. I think they're up to about 50 billion. They're sector focused PE. But yeah, it was an interesting experience because I went basically 03 where, you know, we had the 9/11 issue, right? Just coming out of there through 2008 financial crisis. And then, you know, finally out of there and then eventually running my own firm, my own advisory. So, so that's basically the gist of what I am. I'm pretty much a private equity guy by experience, okay? I started doing hedge fund systematic after I cut away because I was always an engineer by background, okay? So a lot of the kind of stuff that that I had always had an interest for was more quant systematic, right? So in terms of the background, that's pretty much that. And then these days, what I do is I lost a bet with the chief investment officer of the Rhode Island State Pension. So he asked me to teach at Providence College for a few terms. And, one term turned into 4 because looks like the students seemed to like what I was putting out there, much more practitioner-based approach. So I split my time now between my main businesses and, things like Providence College and kind of paying it forward. So when I heard that, Angie and VizWise were starting up and creating a new network, especially for the more targeted towards the Asian American and Asian communities here in the States, I was pretty interested by that because I wanted to see what the next gen has to say. I'd already interfaced with some folks that were coming out of high school that wanted to get into top colleges, and we talk and we sort of mentor them, and results were excellent. So I wanted to do the same thing at some point in time and engage with the elites of what we have for the next generation as well. And what I mean by that isn't necessarily intellect; it's the character, it's personality. Yeah. So, wow, there's tons of questions. Julia, did you want me to just answer the questions as we went through?
I think you can either just go through some of the the general stuff, and then maybe just pick some.
All right, you want me to just run through the general stuff? All right, guys. So what I'm going to do is I'm going to keep the chat open like this. Feel free to keep feeding the questions. What I'm going to do is I'm going to run through the basics of the major alternative classes. Okay, and hopefully that should answer some of the generic stuff. Okay, and then after that, I'll look through the questions and kind of pick through what I didn't answer. All right. So we'll kind of speed through this. Let me know if I'm going too fast. Sometimes I have a tendency to go New York on you and just absolutely just blaze through stuff. So I don't want to do that. Feel free and speak up if I'm doing that. Okay. All right. So that being said, let's talk about a little bit about what are alternative investments in general. Okay. So to me, alternative investments, private equity, hedge funds, VC, you guys all heard about this cool stuff, right? It's really sexy on the surface, right? Let's just say for me, alternative investments is anything that's not vanilla. It's anything under the sun. You have to have a broad sort of swath at this. So I saw one chat question was like, do you think crypto is a good part? Well, I don't know. Does $1 trillion in Bitcoin sound like a good asset class to you or not? Regardless of whether professional money managers think it's a good idea or not to invest right now, the fact is there is $1 trillion in market cap there, and what, 400 billion in Ethereum, right? And that's just talking about the major cryptos out there, right? I have candidates that talk to me about that stuff, educate me about that stuff all the time. So my answer is absolutely, okay, it's alternative investments. It's something you should be aware of. One of the things I'll tell you is that the younger you are does not mean that you are not good at investments or require experience to be good. What is important is that your thesis from what you know innately from your generation is just as important. A person my age, let's say, that's 50 years old or something, I'm not 50 yet, but I'm almost 50, let's say, right? Look, I got the modeling down. I know all the best practices coming out of institutional investing. I've been around the block more than once when it comes to private equity or hedge funds. Know what to look for, let's say, for sort of traditional metrics and best practices. But guess what? I don't know why you use Instagram. I don't know why you use Telegram. Okay, I got to get that from you guys. And even if I get it from you guys, that's third party, right? That's not as effective as innately knowing it. So information advantage takes its form in many different ways, and how you make alpha is exactly how that is. Okay, so look, when it comes to alternative investments, yeah, institutionally, that means by the banks, by most large asset management firms. Private equity is one of them, hedge funds is one of them, venture capital, real estate, right? Private equity, for those guys who don't know it as much, there's two major types of private equity. There's leveraged buyouts, right? There's growth equity. For hedge funds, everything under the sun for the life cycle of the companies. Could be distressed, could be long short, could be opportunistic, event driven, could be special sit, could be, you know, quant arbitrage, relative value, could be anything. Okay. They pretty much can do anything across the spectrum. Venture capital, angel, early stage, all the way up to late stage growth equity as well. They sort of intersect with private equity in that way. And then real estate, you got different types of asset classes in terms of the types, the locations, as well as you've got, you know, like core type real estate funds, core plus, opportunistic, in terms of the risk spectrum and the returns. Okay, so that's institutional, right? Retail, let's say you're a retail investor. Well, you could invest in alternative investments. You just can't get into necessarily those funds unless you have, you know, qualified eligibility, which is like $1 million liquid net worth without your house, or 300K a person. I know a lot of people in New York, you know, have that sort of those numbers, but you're not necessarily called rich because of the amount of taxation that goes in. Okay, so with retail, what can you do? Well, you can do real estate, right? A lot of people do that, build that up. You can do venture capital, you can be angel, right? If you know folks, hedge funds, and again, if you qualify eligible, you can invest in funds, right? So that's pretty much what that is. But somebody mentioned crypto, absolutely, to me, asset class. What about sports betting? What do you think of that? Do you think that's an alternative asset class, or is it just gambling? I know nobody probably wants to say something. We'll just ask that question. Keep that in mind, right? So, you know, when you talk about Las Vegas and whatnot, right, most of these things, you talk about it, right, it's basically, people say, well, it's gambling. Right? Really, you ask yourself the question, what is an investment versus gambling? In both ways, you're taking a certain amount of risk, right? So if you ask me, what is an investment? What is gambling? Okay, to me, an investment is where your expected value is greater than what you put in, greater than 1. Okay, gambling is what? Where your expected value most likely is less than 1. The probability of your expected value being greater than 1 is less than 50%, something like that. Okay, so what does that mean? It means that you could be gambling in Las Vegas, you could be investing in Las Vegas. You could be gambling on Wall Street, you could be investing on Wall Street. Either way, it just depends on the asset class, your information advantage or disadvantage. Okay, so, you know, one example I'll give you is I have a good friend of mine who's from Wharton. He's one of the best investment bankers I know. Great guy, super fast, Asian, originally from Texas, so a Southern boy, cowboy, right? And he ended up in Chicago, long run. And, you know, we kind of play around a little bit with sports betting. He's really good at it. So he's a banker, but he's bored. So he'll just do that. And when I talk to him, I mean, let's just say it isn't gambling with him. It's information advantage. And it's understanding how to read the tea leaves, which is what I teach in school. Okay. So having, you know, good common sense is really important. Okay. So what I would tell you is like any investment, right, or gambling in that perspective, no particular investment or gamble is necessarily location specific. So it's like Las Vegas isn't pure gambling, right? It's also not field specific, right? Just because it's Wall Street doesn't mean it's investment, right? I think we as Asians, sometimes we put a little bit too much brand equity on that kind of stuff. You got to understand what you're getting into when you do this kind of stuff, okay? Finally, it's not game specific either, right? You could invest on a blackjack table as long as you can count cards, right? You can invest on a poker table as long as you can understand what the counterparty's doing, right? But if you're going into a Wall Street deal without knowing what's going on, you're definitely gambling, okay? So with that known, okay, in terms of investments and stuff, what should an investor look for, let's say? You'll hear all this stuff about due diligence, RFP, request for proposal, all these really formal looking things and real formal sounding things. You can tell just how much I believe in that stuff. Okay. You know, do you really think that when you look at a strategy in a hedge fund or whatever you call it, long, short, or whatever, or private equity, you know, I got a deal here, that you just look at the top down and you look through that diligence, do you actually know why they make money? Just by looking at the data? Of course not. Because if you did, you'd be running your own strategy exactly the same way. Okay. So look, there's big funds out there, Renaissance Tech, Bridgewater, Blackstone on the PE side. When you do your due diligence, let's say you're an institutional investor, do you really think you know what you're talking about? No, it's just a CYA. And for those of you guys that don't know what CYA means, that's cover your 3-letter word. Okay. They got to have reporting like that to be able to do what they do. That's all. So that the investor won't balk if something goes bad. That's pretty much all that is. To me, what you guys said about common sense, this is really important. Okay. You should look for funds that are transparent. Okay. That means they if you don't understand the Greek that they're talking, that you at least have the access to the Greek, to the key man. Okay. Use your common sense. But as we all know, right, I think I rarely quote a French guy, but you know, Voltaire said, what, common sense is not so common, right? So you got to keep that in mind. Common sense continuously adapts, right? It's not static. And then finally, you know, if you think about intangibles and whatnot, I look at those more importantly when I'm looking at funds and product than I necessarily look at, you know, raw performance or this kind of stuff, right? They always tell you like past performance does not necessarily reflect future returns, right? In every mutual fund prospectus or anything else you see, okay? So I tend to look at, is the guy probably going to be a good business partner? Would I go into business with this person or not, right? And if that's the case, then I might consider the next step and kick the tires a little bit more, okay? So that's pretty much what that is, okay? So let's see. Quick rundown of like what PE is, right? So when I talk about PE, private equity, I also include private debt here, right? Because private equity firms sometimes will invest up and down the capital structure. So you do have private equity, which invests in the most risky asset class with the highest return. And then you have the mezzanine layers of private equity, right? Which are investing in, you know, generally junk level bonds, okay, and preferred stock. But again, you have some sort of fixed income basis for it, even if it tendency is not cash at the time. It could be like a payment in kind type thing, okay? So let me put it this way. Everybody thinks of this PE as some nebulous thing. How many of you guys own a house? If there's got to be a couple of people out there that either own a house or own a property, right? So when you go to buy a house, do you just buy it with cash? I don't know, a whole bunch of people do that. I know Chinese folks tend to buy more houses with cash than others, but most people take on a mortgage, right? That mortgage is debt, right? So if you think about that, right? Let's say I had a $100,000 house, I put down 20,000 and 80,000 of that goes to a mortgage, right? Basically what happens, I only have an equity of 20,000, right? If that house increases in value to $200,000, not including interest and whatnot, right? I pay the $80,000 mortgage back, get $120,000 on the sale, right? Excluding costs and whatnot, right? So my 20,000 goes to 120, sans fees. You could call it 100 flat if you wanted to. So that's 5-to-1 leverage, right? And you can do that in real estate. The exact same principle works in private equity, if you're just doing it with a company. Take on a whole bunch of debt, you lever it up, you got the cash flows to be able to pay off the interest on the debt, and guess what? You unload it for either a higher price, or you basically sell off the pieces, or you add to the company, you scale it up, and you calculate, you create a scale premium from that, okay? So basically, at the end of the day, equity, real estate, all these alternative asset classes are based off the same principles, and they're very, very simple. So hopefully that allows you to sort of understand a little bit about it. Things to make you successful in private equity, if you're, you know, like MD and you want to set up a capital structure, right, is that if you're debt, if you have a ton of debt, right, you don't want it to be cash-based debt, right? That's what we call covenant light. So a lot of times with a mortgage, right, you have interest payments you got to make in cash every single month, right? Private equity has that ability to negotiate with the banks, not make it cash-based. They can make it PIK, which is payment in kind. Okay, where that's what we call covenant light. You don't have to worry about the cash. You just issue more of the same security to pay the interest. that allows them to use the cash proceeds to renovate the company or do other things. Okay. The other thing is that if you talking about levering something up, just like a rental property would be, you can't have a rental property where there's a renter at 1 month and then there's no rent at the other month and then you can't pay your mortgage back, right? You need steady cash flow. So a lot of times when private equity first started out in leverage buyouts, what would they do? They would sit there and buy a stodgy manufacturing company that sold like nuts and bolts or widgets. Why? Because everybody needs it. Okay. And then when everybody needs it, guess what happens? You basically, constantly have this cash flow stream. It's not that much in terms of growth. Maybe it grows 2 or 3%. But if you're levered 5 times that 3%, you're going to get 15% in total IRR returns. Okay. So that's basically what that is. So types of PE, like I said, traditional is leverage buyout. That's a stuff way back to the 80s when KKR and a bunch of the big guys were around just starting off, when people didn't know much about it. It's easy for them to mint cash. So RJR and Nabisco, a lot of big deals like that, right? I would say these days, private equity is moving more and more towards the growth equity section. They're encroaching on the VC because mega deals also are less and less. So the deal flow is dropping down to smaller and smaller deals. It still takes the same amount of time to research a small deal, like a $50 million deal, as it does to research a $5 billion deal, which is why most private equity firms always shot for the big ones. Okay, but that's, the arbitrage is slowly getting taken out of the system. People get more and more savvy at doing this stuff. So there's that, the leverage buyout, there's growth equity. Growth equity would be a combination of both capital appreciation of the company as well as the cash flow leverage equivalent. And, for companies like I've worked at with Providence Equity Partners, it'd be sector focused as well. So Providence Equity at the time was the largest sector focused TMT shop out there, technology, media, and telecom. Now, do they invest in, the whiz bang stuff like, what is it, Pinterest or Peloton or all this good stuff that the students tell me about? No, they didn't do that because it's just way too expensive, right? It's too big of a deal. There's way too much premium already put into that and not enough safety factor. What they do, they buy things like Cox Communication Auto Trader or something like that. Something that's kind of stodgy in the tech sector, but still something that they could probably roll up and increase value through either operational or financial means. So that's what that was. Private equity tends to have more consistent returns in general. Okay. If you want to invest in it, okay. Somebody asked me, I think in the question and answer, whether, how do I invest in PE? Well, it's like anything else. It's really easy. You can, call up the PE fund, ask them to send you a limited partner prospectus, right? The only thing that I would tell you is since it's PE, okay, yes, the minimum is supposed to be 1 million. For a good PE firm, it's not 1 million. Try 5, maybe 10. Okay. For Blackstone, talk about an 8-digit number for sure. Okay. Why is that? They got tons of institutional investors. And plus, they want the capital to be sticky. The more LPs they've got, right, the more reporting they've got to do. And there's a limitation as to how many LPs you can have per fund. So, if you got a $5 billion fund and somebody wants to get in there for $1 million and you only got 99 spots, that's not going to work, right? So you need your investors to be reasonably large or well-connected or both, right? So that's pretty much private equity in a nutshell. It's not the same thing as hedge funds where they, if you find the right one that's in ascent, that's growing, just starting off, that you're going to be able to come in with $1 million and be able to do it. And also don't forget, right? That's 5 to 10 million into one fund, okay? Which means that if you're going to sit there and diversifying means that you probably have 4 or 5 of these things. That gives you an idea what net worth you got to be to invest in these things. So anyway, that's just a little insight into PE. Are there any questions so far? And I'll look through the chat and try to answer those things as well. Okay.
Hey, Frank, I have a quick question for you. So given where the economy is, what particular stage of investment do you think is the best in terms of where we are, in terms of making the most risk-adjusted returns?
Okay.
At this juncture.
Yeah, I think so. What you'd have to do is you have to think about it from the standpoint of your hold times and liquidity factors, right? I mean, for me, private equity is a long cycle type investment, right? So generically speaking, when you look at how long our bull market has gone on for in general, right? And valuations are pretty stretched, right? By historical means. You'd be looking at something like, if you're going to go into private equity right now, I would say that you better make sure whoever those key men are really have Rolodex advantage, some sort of deal advantage, because there's just no way you're going to make arbitrage at right now by the numbers statistically in private equity. Hedge funds, it depends on what type of hedge fund. If you're looking at distressed in general, like Howard Marks and those guys, they should be doing pretty well right now. The market shouldn't be at the levels that it is right now, but you've got artificial inflation, right, going on. But at some point in time, when that comes back, right, the other way, as the markets always tend to mean revert at some point in time, there's going to be, I think, a plethora of opportunities there. But again, distress tends to be a little bit illiquid. So it depends on your time horizon. To me, I was always sort of quant systematic style to begin with. I feel like that's been the most effective for me on a risk-adjusted basis. So it depends on what you calculate for risk-adjusted basis, but the simplest, right, people use is like Sharpe ratio or something. And if you're doing Sharpe ratio, I mean, the kind of product that I look at is Sharpe ratio 3 or above, sustained, So, as an example, like there's product that I invest in myself that's, I think they had their first down month in 60 months consecutive. Sharpe ratio is about 7. And guess what? Chinese American. So that's what I'm trying to say is like a lot of the skills come from our community. The key is ferreting that stuff out. So I would just tell you between, what your risk tolerance versus my risk tolerance, you got to evaluate that. You got to see what your risk target's going to be, your return target's going to be. And at the same time, for me, everything comes down to liquidity, right? Because when the markets crash, what everybody's worried about, right? Cash is king, right? All correlations break down, everything goes to cash, right? Doesn't matter what model you've got. So if you're over levered, I mean, good luck. So that's what I would think.
Right. Just a quick follow up. So I don't know if you have children. Just
I do.
curious,
Yeah. I'm a little 8-year-old.
So you're teaching, in college.
Yeah.
But at what age would you think about sort of imparting some of this information to children?
Oh, you mean imparting what I'm talking about here right now?
Yeah, like, investing, basic finance skills and that kind of stuff.
Yeah, so I can tell you I'm definitely not the tiger parent in the family, I wish I could tell you I was. What I do is I have a tendency to influence by osmosis, if you will. So what I will do is, even when I started teaching, right, sometimes, we couldn't pick Sydney up at exactly the best time, like me and my wife were running around all the time. And so, sometimes I take her to campus. And so the little anecdote about her is like, she'd be at, the business school. It's nice, really nice business school. It's brand new. And, they're Catholic. I'm not Catholic. And so I already feel like a heathen when I'm there. I got my little daughter with her, light up shoes, like cartwheeling through the business school, and God forbid that the dean, who I know very well, she's very nice to me, but she's a little bit shorter. God forbid the dean comes around the corner and gets whip kicked by my daughter cartwheeling down the hallway. But I would do that sort of semi-deliberately, and she was maybe 4 or 5 years old at the time. Oh, I want to say, no, yeah, she was like, no, I'm sorry, 5 or 6 years old, right, at the time. And I would do it deliberately because I wanted her not to have a fear for the students. I felt that, kids are a lot more adaptive than we give them credit for. And if you just let them sort of tell you if it's too much, then you go, I think that's the best way to go about it. So I have a tendency to like drop folks into the deep end and see what's going to happen. And so I do the same thing in my classes. So that's the reason why, like, you're talking about a Catholic university that's not top ranked at all, right? But since I've been there, what's it, like 2 years now, right? Through COVID, we had a 90% placement rate at the highest levels in the banks. Goldman, JP, you want investment management, Fido. One was even private equity, one venture capital. We're talking about like 30 kids, you know, during COVID. Like one kid I know beat out, was like, he went into an interview process with 1,200 candidates, all Ivy, except for him. He basically just, you know, forced the door open himself from PC. And he beat out 1,198 of them. The only person that beat him was an ex-Morgan Stanley investment banker. The only reason why was because he had experience, deal experience. He was so good, they gave him an offer on the equity capital market side, which he refused because they tried to lowball him. So it gives you an idea, like once students understand or kids understand that they can do something, sky's the limit. So that's my personal opinion on it.
Very interesting. Thank you. And just a very quick follow-up. I don't mean to, you know, monopolize the food. But what do you think account for the high placement rate? It's pretty amazing.
I would call it controlled aggression is what it is. Unconventional thinking. Oh, I'm just gonna, you know, most people, I'm just gonna, just toss my resume in to the black hole that is the job application process. And I always told them, like, no. That's not the way you do stuff. Okay. Networking is about much more than that. That's called pounding the LinkedIn, every single person you know, not taking no for an answer, you know, being polite about it and professional, but when you get your 5 minutes, you just light that person up. And you let them know that you've got the tools and you got the talent. It takes prep though to do it, and it takes desire. But I mean, that's what that is. I think like if you talk to, I tend to be more direct about it, but if you talk to anybody at the top schools, they have that sort of internal DNA, if you will. So I think like many of the things that we talk about culturally, you know, in terms of Asian Americans, I mean, I was one of them. When I was, you know, graduating out of high school, because my parents pushed me, like they pushed me. I graduated out of high school when I was 16, you know, I got my bachelor's degree when I was 19. I didn't know what the heck I was doing. Okay. To be honest with you, yeah, I thought I was smart, but I didn't know anything about the real world. Okay. It took me quite a while to figure out, you know, why I was doing things, and what I really wanted to do. So, you know, my objective really in terms of, you know, schooling or teaching or mentoring people is teaching a way of thinking, right? It's saying like, okay, I mean, yes, you have certain attributes that you're going to excel in, no problem. But guess what? That's not enough, right? You need a crew. You need a network, okay? How are you going to do that, right? It starts step by step. And then, you know, you'd be surprised what you can do in a year or two. You know, like after this chat, if you want to, I can show you something. The students actually, because I think I'm going to take probably a step back at the school semester. The school said, look, we don't know if we can handle budget, right? I mean, I have like a 1-pager of the students' comments off my phone that I just, you know, dragged off the last month only, right? It's insane, the kind of response you get. I mean, they literally walk the hill. They were like, what are you doing? You know, this person is literally changing the curve at this university. What are you doing? Right? So it's okay. I mean, I look at it as like, you know, I'm going to do what I can for the people that are around me. But, you know, like if the school decides to cut back, they'll cut back. I don't care. My thing is like, I'll do the best I can though in the time and the space that I've got to help. That's basically what I'm trying to do. I'm trying to find that next generation of great potential leaders.
All right, thanks. I'll let other people ask you questions. Thank you very much for sharing.
Okay. Yeah, I think I just got a comment. Somebody said that, you know, they like the fact that I'm just not BSing anybody. So that's good. I mean, look, that's who I am at the end of the day. That's what I do. I hope it helps. Like you should not take my stuff as gospel. What's important is that take the bits of it that you feel that are important that you can use. I always tell the students, it's like, I try to provide you with toolkit and a little bit of experience. And then you decide what you want to do. All right. So are there any other questions before I move on?
Yeah. Hi, Frank. I really appreciate you stopping by, and it's been really helpful.
Sure.
I I'm just gonna touch on the networking part. So I'm a sophomore in college right now.
Yep.
And the recruiting process started like 2 months ago. And I've been kind of deading the water. Like the cold emailing doesn't work. And just reaching out to friends who know people there doesn't really work. What are your advice for somebody in college trying to do everything people say he should do, but not seeing any I guess returns?
So let me give you an example. Like this was before COVID, but I'll give you an example of my younger brother who's also, he's like, I call him the production model because he like did everything that I did but probably better, right? You like love-hate relationship with a younger brother like that. You love the kid, but at the same time you hate him because he's smarter than you, right? So when he got out in 2005 out of Wharton MBA, the market still wasn't 100% great. And he did all the same things you're talking about, email people, Wharton network, you name it, right? So how did he line up his job? He literally paid $1,500 out of pocket at a time to go to conferences and said, you know what? I'm just going to force myself to go to one of these things and I'm going to network my butt off, right? And that led to his first biotech venture, ended up being a biotech CEO, kind of exited out of that position. And now he's sitting in California, just kind of hanging out, trying to figure out what he's going to do between that and, learning how to woodwork and stuff like that. Okay. So that's one way of doing it. Right. And that's sort of like person to person, more traditional. The other way that I always tell people is that in COVID, right, just because you've gone through, conventional channels does not mean that you're going through the right ones. Okay. Sometimes what you do is you go through unconventional channels, you troll the web and you try to figure out, you try to guess, let's say, what the CEO or the managing director's email is. And you just start pinging those emails. Okay. And one of them is going to get through. When you get through, right, make sure that your delivery of your message is short, straight to the point. Okay. When you do that, they might actually respond. Why? Because before, okay, when they're in the office, they have 2 or 3 administratives that you got to go through. There's no way you're going to get through that. Okay. When they're in COVID or even post-COVID for that matter, people have realized that you can actually still do deals while being at home, which is weird, right? But especially for me, but that's the new normal. Okay. So what does that mean? It means that, believe it or not, your probability of hitting somebody that actually can be a decision maker is actually higher. It's just that you have to sit there and sift through and really be determined to try to find that, whether it is sort of 1 degree or 2 degrees of freedom away from your LinkedIn network and all the people that you know, or whether it is literally delving the dark web and trying to figure out what's going on there. The best example of that is that I have a kid that I met through a connect of mine. Basically what happened was, it's just serendipity. My daughter was doing a summer camp at Moses Brown up near Brown University. One of the camp counselors was this kid. He wanted to go to Harvard. I was like, well, he's got something there. So I told him, listen, text me, right, if you want to talk about how to get into Harvard. So he does do that, gets back to me. We talk about it, strategize, he goes to Harvard. And then I told him, I said, listen, if you got people of your caliber, let me know. He goes, I can't think of anybody except one. It's this kid, 16 years old at the time. So I talked to him for a while. And he was doing some pretty good stuff. He's a coder, pretty much into all the tech stuff. And he, he's like, well, Frank, what do you think I should do? I've already talked to Rhode Island legislature about, helping personal finance knowledge base for people, maybe doing that in a technology way. And you know what? I told him, I said, that sounds great. Okay. But, you should stop that nonsense. You are good enough to go and access Silicon Valley. What are you doing around here? Right. And then COVID hit. And I said, look, everybody else go think you can't get a hold of those people. See what you can do. Fast forward 1.5 years, he has a newsletter that he has 25 to 50 VC partners on. They listen to him for product management. He was at one point in time the product manager of a $50 million VC firm. But they couldn't hold him for very long because he's underage. So he's one of my internal contacts into crypto to teach me all that stuff, believe it or not. The funny thing I find is interesting about it is like, you know, he still keeps in touch with me. I don't understand why, because I feel his VC network is more powerful than mine by now. So, you know, it's great though, right? Because you do good, and you know, you don't expect anything in return, reciprocity wise, but it does happen. So that's what I would tell you. I can't give you that magic, you know, sort of solution that comes out. It's just blocking and tackling and not giving up, but trying to think of things in an unconventional way. That's what I would tell you. Does that help?
Yeah, just going back to that, you know, emailing the kind of senior management or like somebody who has the decision making power.
Yeah.
That is definitely unconventional, because I don't know if do you think it's appropriate for like somebody like a sophomore in college emailing a, I don't know, like manager at this or executive at this firm?
You have to ask yourself that question, don't you? I mean, they have a saying like in the old days when I used to work at GM, it's like, if you want to work at Ferrari, what do? You find the Enzo and you put your resume in between the guy's windshield wiper. Right?
You gotta really want it. That's
if
what
you
I'm
really
taking
want
away.
it.
Yeah.
You see what I'm saying? So, I mean, look, I realize this can be a shock, especially in terms of cultural. Like, this is probably the first time you're hearing it from somebody, you know, like me, right? But I'm just telling you flat out is that, what do you have to lose? Like, if you really know your stuff, what do you have to lose?
Right.
The worst they can say is no.
Yeah, which is what I'm getting so far. So
yeah, exactly, right? You see, that's what I'm trying to say, because those people you're talking to are not decision makers, right?
Yeah.
If you get to the top guy and the top guy even just, hey, listen, I can't take you right now, okay? But I like what you're doing. I like your panache. I like your courage, right? Then you tell them like, look, thank you for your time. I don't want to pester you anymore, but let me ask you one other thing. You know any of your other friends that are looking for people like me? You never take no for an answer. Never. That's why I said relentless aggression. Don't care, right? Force issue, right? You do it politely, but that's what it is. But that's the, you know, again, it's like, it's easy to say, it's hard to do, right? So the one thing I would tell you that it doesn't come in a day, right? It takes time, but you have time. You're a sophomore, and this is the right time to do it. To give you an idea, it's like one of the kids that's going to Goldman from my school, right? To give you an idea of how much of an influence we've had on him, as soon as he gets into Goldman, what does he do? He pounds the table. He goes, I have to be an ambassador back to my school. I'm going to build the pipeline now. I wonder where he got that from. He got that from people like me, because I said, no, I'm not going to help you anymore unless you help other people. That's the way I work. So he comes back, he gives a spiel on this to everybody, you know, sets everything up. You know, he wanted me to come, so I did. I don't know what I did to you know, to deserve that, right? But at the end of the day, right, guess what he was targeting? Second term sophomore. And I do know through my network at a senior level, banks are hiring like crazy right now. So just because you got no before doesn't mean you shouldn't go back and revisit those contacts again. That's the best advice I can give you.
Okay, thank you so much.
Sure.
Yeah.
All right. So, wow. So, does anybody else have any questions before I move on? All right. I'll just go through real quick. But like I said, you can always interject at any time, right? So I think we were just talking a little bit about this, but again, if you want to get in the business, right? Remember, traditional track for PE is private equity is elite banking. So basically, you need to start off, you know, probably good business school helps. Great business school helps even more, right? Undergrad or grad don't matter. Prepare to work 120 to 140 hours. So people always ask me, it's like, you know, can I get into banking? I was like, I don't know. Can you? So, you know, I always ask them one question. It's like, how does 3 hours a night sound to you for sleeping? And they're like, I think I can do 4. I was like, no, how about 3? 100% lucid for 3 months. Can you do it? If you can do it, right, you're probably cut for banking. You at least have that piece. Some people are just not cut out for that. You got to be realistic. There's other ways to get to that. Okay. Got to be one heck of an Excel master. I don't think that's going to be an issue with most of the people in this group. Okay. But don't touch that mouse. Do it all by keystrokes. Faster, better, right? And then you just, you got to know what to do in terms of the training. Like I said, I brought a bunch of that stuff to that college, and it seems like it's working. You have to count on the fact that the market's going to be volatile. So there was a question about whether the market's going to tank at some point in time. Listen, if the market's tank anytime in 3 years, that interval, okay, you could be screwed, because you got to get to third-year analyst before you have a shot at going to PE in the traditional sense. Thus, the networking is even more important, right? You could be first-year analyst, but even if you don't have time, you better be getting out there to be talking to folks. This is how this stuff works, okay? Finally, if you get the third-year analyst and you come up snake eyes, okay, what could happen is that you got your MBA possibility. You get out of jail free card. You get one of those in your career. That's top tier MBA. Okay. And there's a process to get into that as well, right? So that's what I would tell you. And then, as I had said before, try to be unconventional, be creative. That's goes to show you in anything you do in business to be top tier, right? You have to be somewhat unconventional. If you're conventional, that means somebody already thought of it. That means you're a follower, right? Now, I can't tell you that I'm surely a leader either. I'm just telling you, if I had my druthers and I was your age, what would I do? Okay. So just trying to give you guys more of a head start, right? All right. And so for VC, let's say, venture cap, what do you want to do? What's different about it? Well, look, I mean, what is VC? Everybody kind of knows what this is, right? You throw a bunch of money at an idea, right? Sometimes it works, sometimes it doesn't. Sometimes that works because of the network effect, right? If it sets up in Silicon Valley and it's some sort of, great idea that somebody else has from the East Coast, most likely the West Coast idea will work because Andreessen Horowitz or somebody, or John Doerr is behind it. Okay. So what is it? It's basically an option. For those of you guys who know derivatives, right? It's basically a call option on an idea. Okay. VC firms will generally take a minority. That founders will still have that class. And let me just put it this way: if you do VC, right, and your batting average is better than 20%, you are a Rain Man. You're doing really well. Okay. It's much more of a binary outcome than PE, right? So if you're a founder, right, you want to found a company, you want to go entrepreneurial, right? A couple things I would tell you. Number one, don't take venture capital unless you absolutely have to. You got to wait out as long as you can. I actually got a couple of students today. They kind of hung out. I'm crazy. I never grew up, right? I don't know why these 20-year-olds are hanging out with me, but they wanted to show me a VC pitch they were putting out. The thing's getting traction, right? And they're like, what do you think? Do you think we should go out and ask for money? And I was like, no. Go angel funding only. Why? Because you're going to get burnt out. What that means is that your share is going to get diluted to such a point that by the time it's actually meaningful, you won't make any money off of it. So understanding capital structure tables and understanding how much VCs generally take each round is really important, and see how much you get diluted. And then you got anti-dilution measures. So you got to make sure whatever you do, if you got a great idea, you also have a good legal team, especially when those vultures start coming, right? I would also tell you, look, trust nobody in general. Everybody's got an ulterior motive for that stuff. But I think you guys are pretty, well-heeled on that kind of stuff, okay? If you're an investor, yeah, you can invest smaller amounts, right? If you know people, you can do angel, right? If you are part of the VC firm, obviously you have the money. If you're high net worth, you can put in like maybe at a round A or a round B, okay? At $1 million or so, okay? But what I would tell you is that if you're looking for somebody, again, I'd go back to the same thing that I said before for investors in general. It's like you want to find somebody who's reasonably transparent, right? And sort of obsessed with their idea. That way they don't get distracted or easily sidetracked, by either money or somebody dangling a carrot in front of them. Okay, so that's what's really important when you look at this kind of stuff. Okay, finally, if you want to get into VC, first most important thing in my opinion, go to the location. Okay, that's the other thing. If you say, and this works for PE too, but PE is more, sort of ubiquitous, in terms of generically being around in both coasts as well as the heartland, for example. Okay, but if you want to do VC, and let's say you want to do tech, and you want to do it, and you're in New York, that's not going to help you. New York is not the nexus of VC. If you want to do biotech and you're in San Francisco, you don't, and you're a square peg trying to fit into a round hole. Okay, if you want to do tech, go to tech, San Fran, Cal Berkeley, places like that, where you can literally press your face to the glass of people like Elon Musk and these guys, right? You might get hauled away by security, but that's okay, right? He'll remember you, okay? But if you have to interview for a VC spot, just try to imagine that. I'm a VC partner. I want you guys, but you guys are on the other side of the country. So what does that mean? I got to take time out of my busy day, take a 5-hour flight over direct to find you, interview you, then come 5 hours back. That's too much of my time. I'll go to Stanford instead. I'll go to Cal Berkeley instead to find that person, right? And they should be pretty close. That's the only disadvantage you sometimes would have, this kind of thing. And that could be the ender right there. So meanwhile, if you're VC, you're deal guy. So guess what? Build your own network. Case in point, 17-year-old kid I was telling you about. His network is bigger than mine and he's 17, right? Got to have those cojones. The last thing I heard about him was he was in LA on a all expenses paid trip talking to Scooter Braun and a bunch of people that wanted to invest money. They're throwing money at him and he refused. So hopefully, you guys get on that track and there's the opportunity for something like that. Okay? So, like I said, these guys aren't people with silver spoons either. They're not people that are just coming from ultra affluent. I'll also tell you that kid ended up talking to one of the biggest private equity titans' sons that was trying to do VC. And he was able to increase the pipeline of his son's VC firm to such a point that his father actually pumped him on his annual letter, a $100 billion PE firm, saying like, boy, my son's doing great. Okay. So that being said, we kind of laughed about that because we knew the pipeline wasn't coming from the son. We knew it was coming from some 17-year-old kid that came out of Rhode Island. Because it was him that was creating it, right? So that being said, let me see, I got some poll that came up. All right, so that's what I would tell you about that. Hedge funds, I'll go through this real quick. Look, again, any strategy under the sun. You guys have heard all this complicated terms, I'm sure, relative value, stat, ARB, convertible ARB, event-driven, special sit. You got Bill Ackman, you got all these titans talking about how great and how smart they are. They are bright people. There's no doubt about that, okay? But again, it's their brand cachet and it's the Rolodex that really make the difference, especially on those very concentrated deals, okay? So, if you think about any strategy in hedge funds, it could be anything that's just not vanilla, that's just not long only, right? I just look at it this way. Strategy, whatever it has to be sustainable, right? Second thing, you have to be explainable, right? If it's Greek, who the heck knows what you're talking about, right? And it has to make money better than if you just stuck it in an index fund, which most hedge funds cannot do, right? And then finally, well, it has to be legal. One of the things that Wharton is very well known for is that I think we have more people in jail than just about anybody else in the top tier business schools. We're really good at that, pushing the envelope and then kind of going over, okay? So if you want to found your own hedge fund, you can do it. It's just that the regulations are a lot more onerous than they were 10 or 15 years ago. I think Citigroup put out something saying like, look, if you don't have $250 million, you can't, in assets under management, you can't really run an institutional grade hedge fund, which is kind of crazy because in the old days, anybody could hang a shingle, okay? If you're an investor, okay, you don't have to spend 5, 10 million like private equity. You can do 1 million, right? You can do the qualified eligible, okay? But here's the thing. Don't invest in something that's just hot. Or people say, oh, it's great. You know, the quant's great. No, invest in something that you can sort of understand. You understand by common sense, right? You want strategies that are reasonably consistent. So that way, you know what you invested in and the guy didn't all of a sudden just dump it all into Bitcoin, right? To me, I'm biased, but I like liquidity. So I like quant, I like liquidity. Why? Because you got a good quant, it basically owns up to financial theory, which says that, listen, diversification is king. And guess what quant does? It does everything that a good asset manager is supposed to do, except it's more diversified. It can trade more positions. It's a hard price finding a real quant. So how do you get into hedge funds? Be an analyst, right? Many different ways, but once again, Excel jock or, you know, queen, however you want to look at it, right? You want to know the market's cold, whatever you're going to do, okay? You can go to the banks if you want. They have some, you know, hedge fund prop desks these days, but not as much as they used to. I'll probably say you can go look at the hedge funds themselves, but make sure you understand exactly what they're doing. Make sure the PM is not some sort of con artist. A lot of these guys are, okay? That's the reason why the returns are so bad. I mean, believe it or not, the hedge fund indices even include what they call survivorship bias, which means that they only look at the hedge funds that actually survived, not to mention the ones that all died, okay? So their returns are sucky even for the ones that survived, right? So you got to find something that really kind of, you know, fits your bill. It takes time. So like anything else, it's caveat emptor, it's buyer beware, right? So, and then the last thing I'll just tell you about is real estate private equity. I know that, you know, I didn't mention that in the chat, but real estate private equity in and of itself, again, I told you, right? Real estate and private equity are very similar. It's just a leveraged vehicle, except real estate applies a lot more tax advantages in general, okay? When I was at Morgan Stanley, if you look at the legal entity structure of a particular real estate investment, they would put it on 11 by 17 paper because there were so many opcos and holdcos across international borders to avert taxes legally. Those legal entity structures would cost upwards of $500,000 to $1 million just to set up. But it was because the deal was worth a couple $1 billion. It's more than worth running it through all those entities to skirt taxes, right? Okay. If you think about, you know, sort of types or geographics, right? Geographics are even more important in real estate, right? Very localized, right? So there's like international, there's tier 1, tier 2 cities, all that kind of stuff domestically. In terms of types of real estate, what you got? Residential, you got commercial, right? Residential, you'd be like single family or a multifamily. Commercial, you'd be class A and down, right? You could have multi-use industrial, right? Condos are a separate unit in terms of how you value it. And then if you take a look at all the different types of sort of funds, right? There'll be different types of funds. There'll be like a core fund that'll have like a low teens type return, core plus, which would be a little bit of renovation, capital appreciation. That might go up to the high teens, like low 20s. Then opportunistic would be like development or greenfield. That stuff would be like 25 plus, okay? So, you know, again, have to have very good localized contacts, understand the Byzantine laws, especially New York City real estate. I'm sure people know just how crazy that stuff is and why, you know, very established players, you know sort of the ins and outs and nooks and crannies of getting things passed quicker, right? So this kind of stuff is sort of an animal in itself in terms of regs, okay? But if you're an investor, I would just say, look, you know, you could do this with a fund or you don't have to, right? But timing is key with this stuff, even more so than the funds themselves, right? Or other types of alternative asset classes. Only what you can afford on leverage, okay? Because you know it's going to be illiquid. You could get stuck, right? So, and then I would tell you, you know, in terms of investor, if you look for something, look for somebody whose policy is not President Biden's at this time, because him getting rid of a lot of the investment tax advantages, I'm telling you, it's going to absolutely ruin, in my opinion, small investors in this asset class, because the big investors will no longer have tax advantages. And guess what they're going to come? They're going to come down and they're going to brutalize people in the single family space for those smaller tax advantages. Okay, so a lot of these things in terms of policy, if they ramrod it through, this is not being political. This is what I basically say in my investments class, is that you got to watch out, because these bureaucrats don't necessarily think about what the ulterior consequence could be, because they're not talking to best practices people in the business. So look, if you want to get into real estate, right, you don't necessarily need to come from Ivy, like unlike the other places, like if you're a hedge fund or your private equity. Yeah, I mean, having a Harvard degree or, Penn degree helps. Okay. Real estate people come from all walks. Being a real estate agent and going into real estate is actually a pretty good way. Going to Cornell's Hotel School of Management, top notch. Okay. So it's sort of a lot different. And then I would say location wise too. So if you're in Austin, Texas, let's say, and you go to UT Austin, look, you're going to have the lay of the land there. You're going to understand how that real estate market works. At the same time, you're taking real estate classes. Guess what? You're probably going to do pretty well. Okay. So that's what I would just tell you. And then finally, in terms of private equity or skill-based stuff out of school, again, Excel helps a lot, right? Building the models and whatnot, but it's not the end-all be-all. Understanding deal mechanics, understanding what IRRs, how to fast calculate that stuff in your head, which you, believe it or not, can do. You don't need Excel to numerically solve it, okay? There are tricks that you learn from Penn and from Wharton that can make you the equivalent of any MD in any deal room. My students have found that out hanging around me, okay? But you probably need Argus as well. That's the Stasis real estate package that they use as an addendum to Excel, okay? So that's pretty much what I would tell you there. Other than that, yeah, I mean, I had like a slide of a bunch of student comments that folks gave me from school. I don't know if you want me to put it up, but I can. Like I said, it was the last month's worth of stuff, and the kids want me to put it together. But like I said, Julia, you tell me if you want me to put that up just as a ender for that, and then I'll just kind of go into the chat and see if I can answer some of these questions.
Sure, of course, yeah. Do you want to share a screen?
Yeah, sure. Let's see. Multiple participants, right? And share the screen. Where am I here? So if I do. That. So to give you an idea of what you can do, right, over a few terms. These is just off my phone. I could find in a month. I wasn't doing it deliberately for this. I was just curious after the students asked me, right? My objective for this talk is to get you guys to understand that, look, the horsepower is there with all of you. The question is whether you want to do it or not. So I think Julia, in the small amount of time she's gotten to know me, knows I'm kind of a loose cannon. I'm kind of a kid I'm kind of one of those guys that never grew up. Okay. So I can be anti-establishment and I can be extremely direct, and I don't care because I don't have to listen to what other people tell me. But what I do when I do it, this is what you get. Okay. And I think you guys can do the same. That's what's important. All right, so let's see. Chat questions. Does anybody have any questions before I run through the chat?
If anyone has any questions, feel free to open your mic and directly ask questions. Frank is super busy, and this is your opportunity. Talking about networking, talking about, speaking up, showing up. This is your opportunity. So if people are still thinking about the questions, I've seen some questions about the difference. I mean, you've run through already, like the hedge fund side and the private equity side. And someone is asking you, what do you like, since you've been on both sides, right? Do you have any preference on one versus the other?
I'd say they're both privately owned vehicles, right? So the question really is that number one, if you're talking about the work, right? Private equity is more of a long run type deal. So you get on a deal, you get on their board of directors if you're reasonably high up, right? You get to see the deal being done. It's sort of your baby. you sort of grow it slash make it more efficient. So it becomes sort of your life session, right? And same thing with VC, right? It's basically an idea that you're trying to push forward in market, right? Hedge funds is more kind of rapid fire necessarily. It's more liquid. So you have that change that's occurring sort of every day, right? But then again, it can be stressful as hell if it goes the wrong way, right? So I would just tell you, ultimately, beyond those two differences in the way the job function is, right? It's how you work with your team, managing partner and whatnot, because you guys will be spending a ton of time together, okay? If you don't like those people, it is the worst existence on the planet. So to each private investment firm, it's different, okay? So I will just give you examples like this. It's, you know, friends of mine used to say, hey, I mean, when I was at Providence Equity Partners, I was the highest ranking Asian person of any level by at least 5 ranks. I was just under the COO, okay? Now, here's the thing. The COO, my COO is Jewish, but he's Caucasian. And the rest of the firm is predominantly Caucasian. And it's also predominantly a Harvard shop. I'm Wharton, okay? And I think my COO was Fordham, right? So we're kind of like totally out of our element in terms of what they generally hire by the specifics, okay? But he's like a world level networking guy, right? And I'm kind of a balance of the two, right? I'm not that level, but I can get around in a room, and then at the same time, I got quant, so I can play. So, you know, what happened? Well, one day he's like, I gotta go, Frank. And I'm like, what's going on with you, right? I'm not gonna lose my air cover, right? We built so much, and I'm gonna lose my air cover. He's like, look, there are just times where you realize that you simply just don't fit, and you never will at the level that you expect. Why? Because the 3 founders all went to Harvard. They all came out of the same class. They all basically were like kids in the same neighborhood. I happen to be the neighborhood over. I'm good, right? But I'm never going to be part of their neighborhood. Is that racist? Is that, you know, somehow just unfair and wrong? Well, maybe it's unfair, but it's not racist. It's private. It's their choice. They would want to pick somebody that can finish their sentences for them, right? So whether you want to believe that or not, right, you try to find, if you can, if you have multiple options, you try to find that firm that also believes in you as a person, that likes your jokes, you know, that likes who you are as a person, that likes your activities outside of work, right? Hopefully that answers the question.
Thanks, Frank.
Hi.
Go ahead, Jessie.
Go ahead.
Yeah, hi, Frank. Thank you for your sharing tonight. And I have a question regarding what do you think is the best strategy to switch from the finance team to the deals team at a private equity, and with about 2 years experience in the investment bank as the financial analyst, and also another 3 years experience in the finance team.
Okay, so when you say you're a financial analyst for the private equity firm, you're talking about somebody who's sort of middle office, right? Like valuations?
Yes.
Okay. Yeah, so if you're valuation team, right, that already helps because you're in the middle of it, right? You probably in all the deal calls where they sort of value their assets and whatnot and their deals, right? So the first thing you want to do is, you know, I used to say this about anything. It's like, if you can, you try to get some time with some of the mid-level guys in on the deal side, right? They're super busy, right? But if you do your diligence, you'd be like, hey, you know, I saw you did, you know, you value the deal at 1x. What do you think, though? I mean, this thing's probably gonna have some risks if we take a downturn. What would be our procedure to, let's say, theoretically mark it down, so we have this planned ahead, and you don't get, you know, sort of sideswiped by something that you didn't expect and your bonus gets screwed, right? And when they sit there and look at that, they'll be like, whoa, I mean, you're thinking for me? And I'm like, no, I'm not just thinking for you, I'm thinking for me too, because we're both gonna get sideswiped if that happens. So we gotta be ready for that, right? And then, you know, he's like, well, what do you think? And I'm like, well, look, I looked at the models, I talked to you already, this is what I think. These different scenarios we could run, right? And you just tell me, like, I'd be happy to work for you, deal side, for free, right? To do the extra work. I got time to be able to do that, even if you don't, right? And what is that telling him in his mind? This person's acting like a deal person. They don't care whether it's Saturday or Sunday. They don't care whether they get paid more yet. They just want in, right? And then you talk to them more and more, they realize you have this deal philosophy, this investment philosophy in mind. What that could happen is that they'll say, hey, you know what? I want you, but we don't have space. Or, hey, I want you, but my MD is still sort of reticent because if we bring a person over from finance, everybody's going to try to come over from finance, right? So politics, right? But then you just shift and you say, well, look, okay, if that's the case, maybe I'll go out and get, I don't know, do you have your MBA yet or no?
Yes, I get my MBA already, but not from Ivy School, yeah.
Okay, well, in that case, this is not an option, but I was going to say, if they're what you do, right, this is why that MBA in many terms for those people that are still undergrad, that's your get out of jail free card. Don't use it lightly, okay? Because you can use that and say, listen, I'll go out and get the MBA, right? I'll come back, you're still going to be around, and guess what? Then off you go to the deal team, okay? But it all starts with laying the groundwork, the networking, the refusal to be just that. You know, when I was at PEP, like Providence Equity Partners, I'd be at the investor conference, okay? And I walk in the door with my little phone here, right? And I get investors come up to me. I'm the head of their quant analytics and their head of their deal flow on that side, the quant marketing side, okay?
Mm-hmm.
They come up to me with this phone and be like, hey, you know, Frank, my phone's run a little slow. Can you take a look at that? All right. And I say, oh, sure, I could take a look at that. The first thing I'm going to do is I'm going to take your phone and I'm going to, you know, throw it to the ground and I'm going to put my boot through it. The second thing I'm going to tell you is that, you see that white guy over there? That's my good friend. He's the chief technology officer. I'm your head of marketing. Okay? That happens all the time. So you can see the stigma that exists with people when they look at you, all right? But what comes out of my mouth, then they're like, whoa, there's no accent there. Well, there's a Southern accent there a little bit. There's a little bit of a Midwestern drawl. But I mean, there's not, you know, they're what they expect, right? And then they realize, oh, uh-oh, that's not what I expected at all. And I'm like, yeah, you damn right. Okay? What do you think? You think I'm just some other just person you can just walk over? That's not what this is, okay? Welcome to my world. That's how this works. And I say it in a very professional way, but at the same time, I think what's important is for you guys to understand that a little bit of that tenacity is necessary. You know, many times for our culture, we tend to sort of introspect more, right? And be more polite, and we think that that's the way to go. No, that's not the way to go, in my opinion. In my opinion, the way to go is that you prove it with your skills, right? So that's really what, you know, for me in the next generation, what I'm trying to teach, right? And yeah, at the particular school that I'm at, you know, there's not a whole lot of Asian students there, unfortunately. Which is the reason why when Angie asked me to do this, I was like, you know what? I mean, this is great. We'll just see who's there, right? Because you guys ever wanted to take a ride, right? This might actually be interesting. And I think that that's what BizWise is after anyway. So, you know, I've known Angie for quite a while. So I get along with her. And, you know, the team members are great. So all I'm doing, this is my first time here, just talking to you guys. So we'll see what happens. But I think what's important, like I said, is to not give up and to keep building your inroads with some of the middle management at the deal teams. And if that doesn't work, again, you've just like what I told the college student that we just talked to, you know, then say, well, look, I mean, do you know somebody else at some of the PE firms that's hiring, right? Don't care, right? Because the deal guy doesn't care. He's not going to sit there and whisper to your boss, like, hey, you know, I mean, this person just wants to leave. No, he'd be like, no, I get it. Like, if you're good, then he'll be like, I get it. Like, let's see what we can do. They're actually happy to do that because then you owe him something. So that's what it is. Okay.
Could I have a follow-up question? Actually, I did also some search like regarding some like a self-education about to know more about like a private, like the deal, like a philosophy about investment. I saw some like the Wharton School, they have the private equity, like a kind of like a continue education. And I want to hear, do you have like any recommendation to do some like a other self-study or like or any like books you recommend to build a relatively solid like a philosophy? In this way, can like talk with them, like know all the terms they already know, like know the philosophy, they know that.
Yeah. So if I were to tell you like what I would recommend, I'm not a book-based person, to be honest with you. I'm much more you look at Wall Street Oasis, you look at Reddit chats, you see what the kids are doing, you see how they think, what the terminology is, right? And you pick it up by osmosis type of thing. It's much more a sort of a new generation look. Why do I do that? Is because I think you want to stay with that new generation as things evolve. Okay, that's my personal opinion. They, believe it or not, to me, they know more about the world as it is today than we do as we get older. Okay, so for me, if I were to ask, I'd say Mac Abacus, I'd say Wall Street Oasis, I'd say, I believe Wall Street Oasis has interview books, like in terms of what questions they ask, and you could drill those things. It doesn't really cost that much, but the idea is that once you get those books, that's just the start, right? The next piece is that you got to find somebody that's actually in those areas that's willing to mock interview with you and test you, right? And that's what we will do, like at the university, for some people that want to do it. That's the reason why. Like I basically spent a summer just curious, you know, like on a Sunday night at 8 o'clock at night, I would have this 2-hour session with these kids, and it started off with like 6 people, turned into 10, turned into 15, 20 people by the end of the summer. Okay. But I was teaching them fast deal math, and I was teaching them, you know, how do you go about looking at a deal and saying, well, does this make sense? Like, why is this the case? Is this operational engineering? Is this financial engineering? What are we doing here, right? Making them think on their feet. And I would just, you know, you'd see a different side of me, right? I'm usually, I like to say I fake like I'm a nice guy, right? Because I do have some banking background. That doesn't make me a nice guy, right? So the one thing that I'll be like, you know, when I first have them in, I'll be like, that's fine, it's okay, you know, you sort of mess that up, that's fine. But towards the end, I'll be like, what's the matter with you? Faster. You know, what do you mean you can't do that? Think it up in your head. Just do it. You got 10 seconds. Do it, right? Why? Because I'm trying to push you to push you to the limit of what you can do. That way, when you get that third round at Goldman or something like that, you're ready. Because a lot of times what will happen too is like, you know, you come from a non-target school like that. They don't care. They don't want to hire you anyway. They got like 5 other. So what they're going to do is they're going to sit there and they'll like chuckle to each other. Like, they're going to like, look, let me give this guy some questions. He's no way he's going to be able to answer that. Right. And then guess what happened? They got the lights shot out by my kid. Because guess what? He knew everything that Harvard kid knew plus more. It just lit him up. And that's what you're supposed to do. Right. Then you get a lot of that stuff through the reading of like what people are looking for, like how do I be an analyst? How do I do all these things? It's all basically the same. What I would just say is that the key is, you know, your accounting dead cold. You use that to build your models. You practice on that. You basically say, hey, you know what? I'm going to build a model on Apple today. I'm going to build a model on Altria today. I'm going to just build it. I'm going to tie the financial statements. I'm going to project it out. Get used to doing that kind of stuff, right? That's what a deal analyst does, right? And then you do it without the mouse. You just play piano on the keyboard. Can you do it? I'll give you 30 minutes. Can you do it? And if you can, guess what? You made it past the gate, right?
Thanks, Frank. I have another question. So beyond building models and those hard skills and stuff, you talk about networking, and then obviously, you know, like Wall Street and PE are much more aggressive these days. But you know, I think one of the thing is like, oh, America sometimes is too right, too left, and then there's no middle ground. And then sometimes in the middle ground, even in the negotiation table, that's probably working better from the Chinese cultural perspective. So I think like in the next 5 to 10 years, maybe the American model, which is like this aggressive type of like Wall Street dog eat dog, culture, that doesn't probably works the best, to be honest. So I think we should be all proud of who we are and then just practice along the way, I guess, and then not just try to fit in, but also, like provide a new perspective on the street.
Yeah, I agree with that. I didn't say that you got to be like them. What I basically said is that your skills are better. So you'd let them know that.
How do you let them know that?
Oh, like if I'm in an interview and they try to pull some crazy stuff like that on me, I mean, let's put it this way. They realize that it's not a good idea to hire me not because I don't know what I'm doing, it's because I could blow them out of the water anytime, right? And that's just my style, right? Now, I don't recommend you do that, but what I used to, like, I had an interview where somebody, tried to cause me trouble, okay? And I basically lit him up, okay? And at the end I said, let me tell you something, okay? Don't mess with somebody smarter than you. Don't get the second round. I don't care. I just want you to know that. I had him sitting there cowering in a corner. Like I was like a McKinsey consultant way back in the day, right? But here's the thing. It's like, I don't really care. I've always been that kind of way. And yeah, it hasn't necessarily made my career path that linear. But
do you think the 90% of people wants to tear you down if you're like smarter, you're wiser, and it just all the jealousy and stuff?
No, I think what it is that they realize it becomes a tactical threat to their organization.
For sure, yeah, for sure.
Yeah, I mean, and so I think that's what's important to keep in mind is that, yeah, you definitely need to play the game when you're there, right? Because there's a certain degree of being, sort of balanced about what you do. If you're good at something, right? If you don't ally yourself, let's say, with the people that are aggressive, which in this case would be the deal team, who are you going to ally yourself with? They're the people that make the money. They're the front office. We're not talking about something in the back office. We're not talking about something like keep a job. Front office is like, doesn't matter how good you are, right? Like my friend who was that deal banker that's now in Chicago, right? During 2008, he lost his job. I'm telling you, the guy's lights out good. And his politics is significantly better than mine, okay? I mean, he's a banker through and through. We used to call him BFL BFE, which is banker for life, banker forever, okay? And at the end of the day, right, that didn't save him. Because why? He's overpaid for what his position grade is. And guess what? He's disposable. Because he's not one of the boys, right? So guess who we call?
One of the boys, you mean like networking, like who has the contacts and all the revenue generating sources?
No, he generates revenue.
But what is
Actually, he's not one of the boys. He's looked upon as the same guy that, for me, that, oh, you're the guy that can fix the iPhone, okay? That's what I'm trying to tell you, is that, trust me, I've been around this long enough to know, right? Until you work for Hill House Capital, right? I forgot his name, but
very famous, very long-term.
Yeah, so if you, because let me put it this way, I interviewed with those guys too, head of North American marketing, okay? But I didn't get along with the 30-year-old that was running it in Hong Kong, okay? But my thing was that
Zhang Li.
yeah, and so until you get into a position like that, or you're working for Fosun or something like that, where people look at you and say, hey, I mean, you're one of us, now just produce, right? Then you're gonna have some difficulty. Most of the other students, like, they would sit there and say, Frank, I want to go to Goldman. I was like, yeah, but you have a Latin American background, right? Why are you going to Financial Sponsors Group or something? Maybe you should go to Financial Sponsors, but immediately link up with their LATAM team. You know why? You have advantage, right? They cannot extricate you so easily. It does not mean it's a bad thing. It means it's a good thing. It means that you should respect your culture, exactly what your strengths are. But if you want to get that initial setup where you got that pedigree on your resume and the foundation, well, you got to play the game. That's what it is, okay? So I'm not saying that you just discount what you are. That's the last thing I'm telling you. I've always kept true to my principles, to the point of, they would say, look, if you don't sign this piece of paper or you don't do this thing, you're out. I'm like, go ahead.
Okay.
Right? Just go ahead and do it. I don't care. Basically, like I'm not going to say what I said because it's too profane for this, right? It's better for a trading floor.
I think the biggest problem a lot of us is the work visa green card process, for those students, and sometimes got taken advantage of because they have to leverage. I think that's one of the biggest impediment.
That's probably true. But what I would say is that, again, if that's the case, right, then bide your time and figure out if the banks really are the best place for you. Maybe the best place for you is not that. Maybe the best place for you is some sort of tech, right? Because if you do tech and finance or something like that, I explained it to my students, right? I mean, obviously, you probably can't do that with Elon Musk and SpaceX, but you might be able to do it with Elon Musk and Neuralink, okay? And if I explain to people very simply, Elon Musk right now, Neuralink, does anybody know how much that's worth? It's worth pretty much what the venture capital he put in, which is $200 million, maybe a little bit more, okay? But time over time, you see videos coming out of that place that are getting kind of crazy, like monkeys playing video games with his mind. You can look it up on YouTube if you haven't, okay? And what I explain to people is, guess what? Don't be surprised. They're looking for financial analysts with 2 or 3 years experience. Now that might seem kind of odd to you. You're like, well, I'm going to be a fish out of water. I mean, I'm going to a tech firm, working for finance. How much does that do for me? Okay, let me explain. You go there, you get paid, I don't know, $80,000 a year. But what do you get besides the salary? It's stock options, right? So stock options assume that's like $20,000, $30,000 in equity a year, right? And put you over 100,000, make you feel good, okay? Let's say you hate Neuralink. So you spend 3 years there, you kind of toil for a little bit. And then after 3 years, your stock options vest and you leave. We're not even talking about the next year's 30 grand or the next year's 30 grand, year 2, year 3. We're talking about year 1. The other 2 years don't vest. So you got your 30 grand in stock options. Well, if Neuralink goes public and it even does 50% of what they say it's going to do, like help Alzheimer's, help Parkinson's, help paraplegic, which is already starting to be proved, right? If it even does 50% of that, what do you think that company's worth? You think it's worth $200 million? It's Elon. What's Tesla going to be worth? What do you think Neuralink's going to be worth when they cure things like Parkinson's? $200 billion won't even be a number to look at. And that's 1,000 times your return. So guess how much your equity just became? It went from $30,000 to $30 million. You think that's a good idea? Even if it's a 50-50 bet, what's the expected value on that? 0 on one side, okay? $30 million on the other side. 5 to 10 years, your expected value is $15 million. You're trying to tell me a bank can do better than that? So keep that in mind. Just because, you don't see an out because the banks can be very, very, tactical and savage about what they do, does not mean you need to go there. The key is to be creative enough within your mind to understand that, look, you can't control what I'm going to do. I'm smart enough to know what I need to do, right? I'm not going to be brainwashed by you to say that this is my little world.
Correct. Don't put me in a box.
Correct.
But how to make sure you're not taken advantage of at the same time?
Well, I think that's what I hope for you guys. I don't want you guys to have to go through the same sort of issues or trials, let's say, that the previous generation had to go through, right? Like with me, right? I'm ABC, right? I mean, you can tell. You can't deal with my, like those people can't deal with my English. They can't use it as an advantage, right? I'll blow them out of the water. I can do this without slides, right? So that's the whole thing. And if somebody like me gets, kind of pigeoned a lot of times, no matter what I do, I can tell you something, right? It took for me to kind of break away and do my own thing for me to finally be free.
Hi, Frank.
Thank you very much, Frank.
Sure.
Yeah, thanks very much for a great explanation. Just one question about, so how do you see kind of the newly technology or product be coming out with the technology and the finance? There's not a lot of like a fintech company coming out. did you see any value from your perspective, or you see any opportunities to grow? Thank you.
Oh, absolutely. I think, like, you talk to the kids in crypto, I don't know what that stuff's worth, right? But what I do know is that, guess what? Enough money creates momentum, doesn't really matter. If you look at venture capital, right? Again, what I said, it's like, look, if you have a tech company in East Coast, it could be the greatest ideas in sliced bread. But if West Coast tech that has trillions of dollars at play can here's a little bit of that and just replicates that, their company's going to take off, right? The same thing with this crypto is that you got probably almost $1.5 trillion sitting in all these different coins and whatnot. And yeah, it's the wild west of, fintech, you could say, right? It's completely unregulated, right? But I'm telling you, like, I do this in my class. I always, if the kids give me an idea, I'll put real-time capital into it to prove a point. Is that, don't sit there and tell me that you believe in it. You put up or shut up, you put the money in, okay? And then we try to figure out a way to make it work, okay? So I think, like, between that and other more traditional fintech, whether it's robo-advisory or whatnot, right? These things are the wave of the future, right? So from an investor perspective, purely retail investor perspective, I'd say it's prohibitively hard to figure out which one of these things is going to work, right? It's going to be a lot like VC. You're going to get a whole,
Exactly, yeah.
5% of these companies are going to take off, and then the rest of them are going to be bagels, right? So if it was me, I would look back into my history, let's say for tech companies like Amazon, and say, okay, if I had Amazon and I had everything and I put 10 grand into every single one of these things, would I actually do better than the index or not? That's what I would just take a look at, right? The other way, right, is to motivate the next generation to go for it, right? And then when you do that, you might get lucky. Like, I'm not saying I got insider's information or that it works perfectly. I'm just saying that I have a 17-year-old kid that's 1 degree of freedom away from SBF. Do you know what I'm talking about when I say SBF?
No, maybe explain.
It's a kid. It's a 28-year-old kid by the name of Sam Bankman-Fried. You can look him up on YouTube. He recently bought the rights to Miami Heat Arena for $135 million. The kid is worth $10 billion in his crypto. MIT kid, okay? So while everybody's talking about how much the Ethereum founder is worth, this kid's worth 10 times that, okay? And he has a 1 degree of freedom connection to that kid, okay? And he's 17. He has a very good friend of his who's a friend of SBF's, right? So what we say is that if you're in crypto, right, it's still primarily unregulated by the SEC. So insider trading technically is legal, okay? Now, I'm not a big fan of that kind of stuff, but what I always say is it's kind of like Dogecoin or all these kinds of things. If you know that one of the big whales is going to get out, right, then you can use that as a short, right? If you know one of the big whales is about to get in, you know that's a long. You can front run that, at least for now.
I see. Yeah.
That is the information advantage. That's the arbitrage, right? But we as people, let's say, I don't know what your age is, but like for me, I mean, I can't do that. I don't know anything about that stuff. I can look at all the YouTube I want, but I don't know those people, right? So what I'm saying is like, in everything that you do, whether it's banking, right, or whether it's investment, right, having a better ear to the ground per se, better data, better information that's legal, okay, is what makes the vast preponderance of the alpha, right? So that's why I always said, like, if you took a look at the banking groups, it used to be private equity banking groups and financial sponsors groups and leverage finance groups were the most sought after groups because they're M&A, they make the most money in banking. Nowadays, everybody wants to go fintech.
I see. Yeah, thanks for the insights.
Sure.
Hi, Frank. I have a question. First,
Sure.
Thank you so much for sharing. This is extremely helpful. So I do have one question about, I feel I'm a little bit stuck with my career at this point. I'm in my early 30s, so I'm not sure whether you felt this way back then. So
all the time. Never satisfied.
I've been working at a vanilla long only for a while, become a junior PM, sector specialist analyst. And I've been also talking to a hedge fund in the meantime. I'm not sure how you feel about long only versus hedge fund. And do you know, a lot of times I'm trying to think about self-awareness, right? I feel I'm fitting really well with long only, with longer term strategy and work-life balance. But in the meantime, I'm not sure, like, do you know you want to be a banker, you want to be PE, you fitting well with this type of culture when you're this age? And also I talked to some PE firms as well, but a lot of them, when I look at, BX, right, they are pretty much just white boy club. So for me, I'm thinking, do I make it to partner one day with how I look and my background and now growing up in this country?
Sure. So, very good questions. I would say, number one, yes, these private equity firms are very homogeneous in nature, right? If you're going to make partner, most likely you'll make it partner on the sort of their developing business side. So if they're developing business in China, right, you will have the advantage, right? That's what Providence Equity was all the time. All the MDs in the United States were not Asian, right? All the MDs in Asia were Asian, right? Well, I'm sorry, with the exception of one, were Asian, right? I hate to say it, you have to get your token there to sit there and cause trouble, right? And I say it jokingly because he's a nice guy. Okay. But to be honest with you, in terms of being stuck, I think maybe if you say that you have your best strength is to go towards long only. I'm not a shrink, but my thing would be that then it must be not the investment style that's hamstringing you. It must be the firm's culture that's hamstringing you. Because either they're too conservative or they're too aggressive or they're not in the right sector or, whatever, that's not giving you the proper provisions to actually execute what you want to do. So again, for me, whether it's long only or whether it's, long short or whether it's quant or whatever, it's always the team, right? And this is the issue, is that you're always trying to find that fit with the right team, if you will. And if you can't find that fit, guess what? Maybe you got to do the Kathy Wood thing, because, right? I mean, before Kathy Wood was, for those of you who don't know, she runs ARC, right? And students were big fans of hers, right? But before she became big, right, and was managing like $50 billion on an ETF, right? Those ARC ETFs, right? She was sitting in a Manhattan office by herself with no air conditioning for like, I don't know how many years, trying to get her business lifted off the ground, right? And she was making deals with all these mutual funds to get, sort of additional AUM through certain gates. And that's the reason why she gave away a certain percentage of her firm, which people started to worry about when that other firm, when that PE firm, I think, reneged and said, listen, no, you need to give us the amount of your firm at this point in time, because we want to now monetize that, okay? So my thing is that it's never easy to step away and try something for yourself. But then again, you only have one life. So it depends on, who relies upon you as a person, and what you feel that you can do to, within the network that you can trust, maybe try to pull together something even outside of some of these hedge funds or whatnot, okay? Because, like I said, end of day, right, you got to have more than one vector out of there. You may find the hedge funds as you keep blocking and tackling, right? But always remember, it's like, I think I've said it briefly in my talk. It's that you gotta understand you can't have that guy be a con artist, right? Or have some issue, because if you do and you happen to be wrong, I mean, it'll be a miserable existence, right? So you have to make sure you kick the tires really well. Did that help?
Extremely helpful. Thank you.
Okay.
Hi, Frank. I have a question regarding to investment. You said private equity is kind of illiquid, and you're very into illiquidity. So with this current economy, then what you are doing, you're actively looking at deals, or you're looking at deals more cautiously, or what? I'm just curious what you're doing now.
Yeah, I mean, we got deals come by our desk all the time, so we don't necessarily look at deals that are on market, right? That everybody else is looking at, right? We'll look at deals through the network that are off market. And, they could be more on the micro side of the deals because a lot of these deals are, more, how do I put it? They're more a fit for certain family office clients that we may know, right? So to give you an idea, there was a security deal. Basically, they're a cloud-based security deal that integrates, home security and even semi-commercial security together, and then has artificial intelligence, right, to figure out what sort of images, facial recognition, and all this kind of stuff, right? And that's a Chinese firm, and they're looking for certain investment, right? Meanwhile, I just happen to have one of my students hire on at a family office that was, a couple of years ago. Guess what they do? They specialize in security investments. So they're reviewing that right now, right? So we are very targeted in what we do. We basically take a look and say, okay, I mean, if I got a client and they're a real estate client, I'm not going to push a tech deal on them unless they actually ask me, right? Oddly enough, that same family office also invested in some crypto. So I guess it depends on the flavor of the month for the particular family. But I tend to look at it from that standpoint is that I'm not a peddler of deals that like most people are like bankers and whatnot, and they do everything on market because it simply is a much lower hit rate and it's not as fulfilling. It's quite more fulfilling if you find a deal that is receptive immediately because you know the client well and you know what they're sort of looking for. So yes, we do look at that stuff. In terms of illiquidity, I still stand on that. Is that if you are any sort of reasonably high net worth investor, I don't know why you're going into illiquidity now. I really don't. Like if somebody wants to counterpoint me on that, great. But unless you know something or you know people in particular areas of the world better than other people, right? And that's true. If you're private equity or something like that, somebody like, I remember 5 years ago, okay, one of the people that launched hedge fund that I know very well, he would just say there was a friend of his in China, right, in the heyday of that, and he goes, look, the guy knows the CCP very well, right, knows the provincial administrations very well, and he's a real estate developer, and he could always cut him in on a deal, and the deal would almost always 2x, if not 5x, right? And how did he do that? Well, his information advantage is complete because he knows those people that are making decisions, right? And so if it's illiquidity like that, then by all means, go for that. But that's definitely off market. That's definitely not on market. It's not being advertised anywhere. It's only through that channel that you can find it. So I would always tell people that I encourage you to think about that. It's like, everybody thinks, oh, the deals work. Deals work like that when, investment banks sell it on sell side. We used to call that selling a warm bucket of spit. Because that's what you get. You're not going to get any arbitrage out of that. Unless you can find GFT, which is what they call greater fool's theory. Go find the greater fool to sell it off to somebody before the markets implode. So yeah, I would still stick with, if you can find liquid instruments, right, and reasonable provisions behind that, then definitely go with that.
Yeah, of course. I mean, just like with this economy, do you think it's a little like harder and harder to find liquid and like good assets to invest?
Oh yeah, it's definitely harder, but it doesn't mean it's impossible. I would just say that what's important is that you continue to believe in your thesis. It's the same thing that what I tell the students when they're investing in particular investment. I was like, look, if your thesis didn't change, the market changes. I mean, it doesn't mean that your company changed in any way, shape, or form. It's just maybe there's a revaluation. So the question is, unless you're over levered, why should you change your philosophy? You're not being beholden to any sort of quarterly report from an investor. You're looking at it from the standpoint of I think this is right. This is the way.
Right.
Hi, Frank. Thanks for sharing your experience with us tonight. I have two quick questions. One is regarding, I see your communication style is very succinct, very sharp, to the point. So I'm just wondering, like, what kind of practices that you have been kind of like shaping this kind of communication style. The second question related to that is that what's the biggest lesson that you learned over your career? Thank you.
Sure. I think two things. I think in terms of what sort of honed my style, well, I was an engineer before, so I guess you could say that we tend to be more straightforward in that area. Not necessarily more articulate, but we tend to be more straightforward. I don't know, I guess like anything else, I think for all of us, probably parents had a big influence upon me, right? And so my parents were never people to BS that much, right? And I've always had a very strong sense of principle. I don't believe in screwing people over for the sake of getting ahead. And I can tell you, many times, I was told by people close to me, right, that you should compromise more. It would do you better, right? But I was like, that's fine, but that's not me, right? It's just not the way I've ever been. So what I always did was when I didn't, let's say, get immediately what I wanted, I just simply continuously improve. Better delivery, better analytics, better foresight, learning from the people on the deal side, right? Continuously. And so over time, right, there's no excuses except to say, oh, you know what? That guy's too good. Okay. So I think that's an okay problem to have, right? Because there'll be somebody out there that thinks that your skills are worth it, right? Now, what's the most important thing I learned? Belief in yourself, persistence, right? Belief that I think people in general are good at heart, right? Obviously, Wall Street, there's a less preponderance of that kind of thing, right? You got to be more careful. But to me, I wouldn't be doing these kinds of things. I always told the students, it's like, they actually know more about what I do than just about anybody else. The reason why is because if you're my age, you're my competition in a way, right? I won't necessarily reveal everything that I'm going to do. But if you're a student and you're a kid, I got no problems talking to you about stuff because I want you to understand that this is not bullshit that I'm throwing at you. It's real. And I think people appreciate that genuine authenticity that you bring. So yeah, it's, I wish I could tell you, like I said, it's like, I was just checking my phone messages today, right? And, the kids are still talking to me about this kind of stuff. And I find it always kind of surprising that they would do that. But I think what's important is that you can see the kind of trust and conviction, loyalty that comes out of that. And remember, these kids are not Asian. These kids are, Caucasian, they're Hispanic. But I get messages from them like, it was great hanging out with you and said, you don't have to worry about taking care of her. I'm on this. I'm going to run it. And I'm like, you get your job first, okay? You take care of your family first. I appreciate what you're saying, okay? But you don't need to do that. What's important, right, is follow the principles, pay it forward, don't compromise, be your own dog, right? It can be done. And guess what? If you do it like me, what the difficulty is that when you're doing it alone, it's really hard, okay? You have to be extremely stubborn, which I am, okay? But I think what is good is, guess what would happen if a whole bunch of you guys got together and you did it at the same time? Well, then you can't just take out one now, can you? You got to take out the entire network. That's not going to be possible. That's the reason why I think it's kind of interesting.
Wow, that's amazing. Thanks, Frank, for sharing with us tonight. Yeah, thank you.
Sure.
So I think time's up, 11 o'clock. So
doesn't matter. Angie, I mean,
it matters.
Yeah, yelled at anyway.
That's us there.
Doesn't matter.
Okay. Anyway,
it's okay.
You,
but I mean, yeah.
Yeah.
So
I think 11 o'clock at Sunday night, especially Mother's Day, and thank you everyone's still here. Thank you all wonderful host Julia and Frank, and Frank's family also stay here with us. I think you grab a lot of fan tonight, you know.
Obviously, yeah.
Definitely.
We've been the first one for sure.
Yeah.
And just want to quickly comment. I really love how the last question, and thanks Ife for asking that last question, and you summarize it really well for us to really have no self-limiting belief and do that persistence. And even though you face some obstacles, you just keep trying and try using some different ways, being creative and unconventional way, which you mentioned a couple of times, and take risks. I think that's also important. And I also like what you were saying in the very end about follow principles and also pay it forward. And that's exactly what you're doing here. And thank you so much. And just as you mentioned, a group of people will work faster. And we are a group of people here at the Coffee Club and Wiswise. And thank you so much for having you joining us on this journey. Thank you.
Sure. Yeah, and then definitely, this is not last time, okay? Frank's going to coming back to give a different topic talk. Especially, he's a great teacher to actually help a lot of students to get a very good job in front desk and investment banking. So I'm thinking to get him to help some college students. So we're looking forward to see more class coming out from Frank. And also, he's actually going to start to teach in Wharton High School intensive boot camp start from May 31st. I think his class almost full, and he's also going to guiding 2 or 3 teams for the Wharton competitions. But again, I really appreciate everyone here with us. 2 hours to 200 people. Frank, thank you so much. Heather and Julia, and thank you everyone. And happy Mother's Day to everyone, and we'll catch up. Thank you.
Thank you guys.
Thank you, everyone.